Hi everyone, and welcome back to Mile High Stocks. In today's video, we will be discussing my top stock picks for today, as well as how the overall market performed this week. I hope you all made money and profited this week as well. But before we get started, please go hit the subscribe and like button, and be sure to turn on notifications to help me out with the YouTube algorithm. The first stock I want to discuss today is CCIV, which is the special purpose acquisition company that is merging with Lucid Motors, an electric vehicle company. This article explains why CCIV is worth $47 billion in valuation today. Investors looking up Churchill Capital's CCIV market value will find a company worth just $7.5 billion, a tempting target at first glance. After all, Tesla's $650 billion market capitalization is almost 90 times higher, and Lucid Motors and CCIV stocks planned to merger. Looks like one of the most promising electric vehicle companies of the decade. CCIV's low market value, however, comes from a quirk in SPAC accounting. The actual value of Lucid Motors sits at $47 billion, which is as much as Ford. CCIV versus Lucid, comparing apples and oranges. Many novice investors might have assumed the merger would leave CCIV in control of Lucid, but they were wrong. When Churchill Capital announced its merger in February 24th, CCIV shareholders realized they would receive only 16.1% of Lucid. Shares of CCIV went spiraling from $64 to $22 within days. It's hard to blame CCIV sponsor Michael Klein for the fall. CCIV only had $2.1 billion cash to invest, and the experienced dealmaker couldn't have possibly acquired a more substantial Lucid stake without a larger checkbook. Even now, CCIV still sits at a 200% premium to its cash on hand. Few pre-merger SPACs come close. Is Lucid Motors worth $47 billion? Many experienced investors would cringe at such a high valuation. $47 billion puts the pre-revenue electric vehicle maker in the same league as established makers like Ford, Honda, and Fiat. Such comparisons, however, miss an essential point. Lucid is not a legacy automaker. Margins in the legacy automaker industry have bordered on zero for years. Cutthroat competition and inefficient dealer networks have drove profits to the ground. Even though the global automotive sector generates more than $5 trillion in sales annually, legacy automakers combined are barely worth $1.5 trillion. Lucid and luxury EV makers look to change that. Instead of competing on price alone, these companies have added in features and engine power that have left even its fiercest critics admitting it doesn't feel like anything else, it doesn't go like anything else, it's fabulous. Buyers have responded by opening their wallets and paying the premium. With Tesla analysts now estimate that the firm will generate a 5.3% net margin in 2022, 4 times greater than Ford's recent average. Put another way, if Lucid achieves just a 10% margin, the EV startup could theoretically produce a tenth of the cars and still achieve the same or greater market value. Comparisons to BMW and Ferrari. BMW and Ferrari offer a better comparison for Lucid's $47 billion price tag. These luxury automakers have relatively high margins and are worth between $50 and $70 billion. What's CCIV stock worth? CCIV could potentially reach $100 by 2024. The firm already has a world-beating design for its planned vehicles. A combination for solid demand, tax credits, and excellent management might well come together and send Lucid stock to a $160 billion aggregate value, which is 4 times what it is now. But the alternative is equally likely. NIO could steal the market share. Even BMW might get its fully electric vehicle lines to compete. That could leave CCIV stock stagnating for years. Regardless, investors shouldn't view CCIV as a $7.5 billion company. Instead, it's Lucid's $47 billion value is what ultimately matters. And if that figure can grow, so too can CCIV's stock. Now I want to look at the daily chart for CCIV. As you can see, when the merger was announced, CCIV stock went from $10 all the way up to $62 and has since dropped back down. But you can see an ascending trend line formed. So I think CCIV is an excellent price to get in right now for long-term investing and swing trading, because you are about to see a third bounce off this trend line, and you could potentially see a move back up to $38 or even $40 by the middle of the summer and going into the fall. This all depends on when Lucid Motors decides to actually roll out its first set of electric vehicles for 2021 and 2022. But if Lucid Motors does in fact have a $47 billion value, and the price is currently set at $7.5 billion based off its $26.88 share price, then I am very bullish on CCIV for the long term. The overall stock market was down all week because the 10-year Treasury yield hovered near 14-month highs amid the federal bank capital decision. The 10-year yield topped 1.7% on Thursday, a 14-month high, while the 30-year yield briefly jumped above 2.5%. As a result, because the bond yields were at 14-month highs and reached 1.7%, this was a bad sign for stock market investors, and many people sold off during the entire week. One of the stocks I'm holding in my portfolio is RIDE. I got in here at critical support, and I currently have a profit target of $18 to $20 a share as this stock moves back up to its 50-day moving average. The next stock I am looking at is PLTR, or Palantir Technologies. Cathie Wood has invested heavily in Palantir Technologies in her fund ARK. I am looking at Palantir right now for support at $22.50, and if it breaks that support, I'm looking for an entry off the ascending trend line, which is this orange line right here. I'm also looking at a third support level at $20.19. If we do get support at $22.50 or $20.19, I am looking for a U-shaped pattern all the way back up to $30 to $35 a share. Another stock in my portfolio is ACIC. ACIC is a special purpose acquisition company that is rumored to be merging with Archer Aviation. Now, because it is a special purpose acquisition company, it has critical support at $10 a share. I am currently up on this stock because I was able to get in right here at $10.40, where the arrow indicates. I'm looking for a move over the next 3 to 4 months back up to $14 and $15 a share. And if it does decide to go back down to critical support at $10, I will be adding more shares. That is all for today. Thank you for watching. If you have not done so already, please hit the subscribe and like button and be sure to turn on notifications. I hope to see you all again in my next video.